as13 Accounting for Investments. This accounting standard includes paragraphs set in bold italic type and plain type which have equal authority. Paragraphs in bold italic type indicate the main principles. This accounting standard should be read in context of preface to the statements of accounting standards and the applicability of accounting standards to various entities. Introduction. The standard deals with the accounting of investments in the financial statements of enterprises and related disclosure requirements. This standard does not deal with the basis for recognition of interest, dividend, and rental earned on investments which are covered by Accounting Standard 9 on revenue recognition, operating of financial leases. A standard was issued in 1993. A limited revision to this standard was made in 2003 pursuant to which paragraph 2D of this standard has been revised to include and venture capital funds. Attention is specifically drawn to paragraph 4.3 of preface, according to which accounting standards are intended to apply only to those items which are material, shares, debentures, and other securities held as stock in trade for the sale in the ordinary course of businesses are not investments and defined in this standard. However, the manner in which they are accounted for and disclosed in financial statements is quite similar to that applicable in respect of current investments. Accordingly, the provisions of this standard, to the extent that they relate to current investments, are also applicable to shares, debentures, and other securities held as stock in trade, with suitable modification as specified in this standard. Investment of retirement benefit plan and life insurance enterprises and mutual fund and venture capital fund and or the related asset management companies, banks and public financial institutions formed under a central or state government act or so declared under the Companies Act 1956. Definitions. The following terms are used in this standard with the meanings assigned. Investments are assets held by an enterprise for earning income by way of dividends, interest and rentals, for capital appreciation and for other benefit to the investing enterprise. Assets held as stock in trade are not investments. A current investment is an investment that is by its nature readily realizable and is intended to be held for not more than 1 year from the date on which such investment is made. A long-term investment is an investment other than a current investment. A investment property is an investment in land or building that is not intended to be occupied subsequently for use by or in the operations of the investing enterprise. Fair value is the amount for which an asset could be exchanged between knowledgeable willing buyer and a knowledgeable willing seller in an arm's length transaction. Under appropriate circumstances, market value or net realizable value provides an evidence of fair value. Market value is the amount obtainable from the sale of an investment in an open market net of expense necessarily to be incurred on or before disposal. Explanation: forms of investments. Enterprise hold investments for diverse reasons. For some enterprise, investment activity is a significant element of operations and assessment of the performance of the enterprise may largely or solely depend on the reported results of this activity. Some investments have no physical existence and are represented merely by certificates or similar documents, for example shares, while others exist in a physical form, for example buildings. The nature of an investment may be that of a debt other than short or long term loan or a trade debt representing a monetary amount owing to the holder and usually bearing interest. Alternatively, it may be stake in the results and net assets of an enterprise, such as an equity share. Most investments represent financial rights, but some are tangible, such as certain investments in land or buildings. For some investments, an active market exists from which a market value can be established. For such investments, market value generally provides the best evidence for a fair value. For other investments, an active market does not exist and other means are used to determine fair value. Classification of investments. Enterprises present financial statements that classify fixed assets, investments, and current assets in separate categories. Investments are classified as long-term investments and current investments. Current investments are in the nature of current assets, although the common practice may be to include them in investments. Investments other than current investments are classified as long-term investments even though they may be readily marketable. Cost of investments. The cost of an investment includes acquisition charges such as brokerage fees and duties. If an investment acquired or partially acquired by the issue of shares or such securities, the acquisition cost or is the fair value of the securities issued, which is which in appropriate cases may be indicated by the issue price as determined by statutory authorities. The fair value may not necessarily be equal to the nominal or par value of securities issued. If an investment is acquired in exchange or part exchange for another asset, the acquisition cost of investment is determined by reference to the fair value of the asset given up. It may be appropriate to consider the fair value of the investment acquired if it is more clearly evident. Interest, dividend, and rental receivable in connection with the investment are generally regarded as income, being the return on investment. However, in some circumstances, such inflows represent a recovery of cost and do not form part of income. For example, when unpaid interest has occurred before the acquisition of interest during investment and therefore included in the price paid for the investment, the subsequent receipt of interest is allocated between pre-acquisition and post-acquisition periods. The pre-acquisition portion is deducted from cost. When dividend or equity are declared from pre-acquisition profits, a similar treatment may apply. If it is difficult to make such an allocation except on an arbitrary basis, the cost of investment is normally reduced by dividends receivable only if they clearly represents a recovery of a part of the cost. When right shares offered are subscribed for, the cost of right shares is added to the carrying amount of the original holding. If rights are not subscribed but are sold in the market, the sale proceeds is taken to the profit and loss statement. However, where the investments are acquired on come right basis and market value of investments immediately after their bringing X right is lower than the cost for such for which they were acquired, it may be appropriate to apply the sale proceeds to, of rights to reduce the carrying amount of such investments to the market value. Carrying amount investments. Current investments. The carrying amount for current investments is lower of cost and fair value. In respect of investments for which an active market exists, market value generally provides the best evidence for fair value. The valuation of current investments is lower of cost and fair value provides a prudent method of determining the carrying amount to be stated in the balance sheet. Valuation of current investments on overall or global basis is not considered appropriate. Sometimes the concern of an enterprise may be with the value of a category or related current investments and not with each individual investment, and accordingly the investment may be carried at a lower cost and fair value computed category wise, that is equity shares, preference shares, convertible debentures, etc. However, the more prudent and appropriate method is to carry investments individually at a lower of cost and fair value. Shares, debenture and other securities held for sale in the ordinary course of business are disclosed as stock in trade under the head current assets. For current investment, any reduction to fair value and any reversal of such reduction are included in the profit and loss statement. Long-term investment. Long-term investments are usually carried at cost. However, when there is a decline other than temporary in the value of a long-term investment, the carrying amount is reduced to recognize the decline. Indicators of the value of a investment are obtained by reference to its market value, the investee assets and results, and the expected cash flow from investment. The type and extent of the investor's stake in the investee are also taken into account. Restrictions on distributions by the investee or on disposal by investor may affect the value attributed to the investment. Long-term investments are usually of the individual importance to the investing enterprise. The carrying amount of long-term investments is therefore determined on an individual investment basis. Where there is a decline other than temporary in the carrying amount of long-term investments, the resultant reduction in the carrying amount is charged to the profit and loss statement. The reduction in carrying amount is reversed when there is a rise in the value of investment or if the reasons for the reduction no longer exist. Investment properties. The cost of any shares in a cooperative society or a company, the holding of which is directly related to the right to hold the investment property, is added to the carrying amount of the investment property. Disposal of investments. On disposal of an investment, The difference between carrying amount and the disposal proceed net of expense is recognized in the profit and loss statement. When disposing of a part of the holding of an individual investment, the carrying amount to be allocated to that part is to be determined on the basis on the average carrying amount of total holding of the investment. Reclassification of investments. When long-term investments are reclassified as current investment, transfers are made at the lower of cost and carrying amount at the date of transfer. When investments are reclassified from current to long-term, transfers are made at lower of cost and fair value at the date of transfer. Disclosure. The following disclosures in financial statements in relation to investments are appropriate. The accounting policies for the determination of carrying amount of investment, the amounts included in profit and loss statement for interest, dividend, showing separately dividend from subsidiary companies, and rentals on investment showing separately such income from long-term and current in respect of shares, debentures and other securities held as stock in trade. The cost of stocks disposed on is determined by applying an appropriate cost formula, for example, first in, first out, average cost, etc. These cost formula are the same as those specified in Accounting Standard AS2 in respect of valuation of inventory. Investment gross income should be stated that the amount of income tax deducted at source being included under advance taxes paid. Profit and losses on disposal of current investment and changes in carrying amount of such investment. Profit and losses on disposal of long-term investments and changes in carrying amount of such investments. Significant restrictions on the right of ownership, realizability of investments, or on the remittance of income and proceeds of disposal. The aggregate amount of quoted and unquoted investments giving to the aggregate market value of quoted investments. Other disclosures as specifically required by the relevant statute governing the enterprise. Main principles. Classification of investments. An enterprise should disclose current investments and long-term investments distinctly in its financial statements. Further classification of current and long-term investments should be specified in the statute governing the enterprise. In the absence of statutory requirements, any further classification should be disclosed where applicable investments in government or trusted securities, shares, debentures or bonds, investment properties, others specifying nature. Cost of investment. The cost of an investment should include acquisition charges such as brokerage fees and duties. If an investment is acquired or partially acquired by the issue of shares or other securities, the acquisition cost should be the fair value of the securities issued, which in appropriate cases may be indicated by the issue price as determined by statutory authorities. The fair value may not necessarily be equal to the nominal or par value of securities issued. If an investment is acquired in exchange of another asset, the acquisition cost of the investment should be determined by reference to the fair value of the asset given up. Alternatively, the acquisition cost of the investment may be determined with reference to fair value of the investment acquired if it is more clearly evident. Investment properties. An enterprise holding investment properties should account for them as long-term investments. Carrying amount of investments. Investments classified as current investments should be carried in the financial statement at the lower of cost and fair value determined either on the individual investment basis or by category of investment but not on an overall or global basis. Investments classified as long-term investments should be carried in the financial statement at cost. However, provisions for this diminution, diminution such shall be made to recognize a decline other than temporary in the value of the investment, such reduction being determined and made for each investment individually. Changes in carrying amount of investment. Any reduction in the carrying amount and any referrals of such reduction should be charged or credited to the profit and loss statement. Disposal of investments. On disposal of an investment, the difference between the carrying amount and net disposal proceeds should be charged or credited to the profit and loss statement. Disclosure. The following information should be disclosed in the financial statements. The accounting policies for determination of carrying cost amount of investments. The classification of investments as specified in paragraph 26 and 27 above. The amount included in profit and loss statement for interest, dividends, showing separately, dividends from subsidiary companies, and rentals on investment showing separately such income from long-term and current investments. Gross income should be stated. The amount of income tax deducted at source being included under advance taxes paid. Profits and losses on disposal of current investments and changes in the carrying amount of such investments and profit and losses on disposal of long-term investments and changes in the carrying amount of such investments. Significant restrictions on the right of ownership, realizability of investments, or the remittance of income and proceeds of disposal. The aggregate amount of quoted and unquoted investments giving the aggregate market value of the quoted investments. Other disclosures as specifically required by the relevant statute governing the enterprise. Effective date. This accounting standard comes into effect for financial statements covering periods commencing on or after 1st April 1995.